Good afternoon. We are here at Amundi. Could you say something about your function here?
Hello, I'm Amélie de Rambure. I'm a senior portfolio manager at Amundi, and I run multi-asset portfolios for our clients.
Okay, and could you say something about your expectations about the coming investment year?
Yeah, we think investors should start the year with a mild pro-risk stance, where for two reasons, mostly. First of all, we think that we will have decent growth in 2025. We expect 3% GDP growth globally, with an outperformance of the US again, and a sluggish, mild, painful recovery in Europe, but still a recovery. And we do expect 4% in China. So decent growth on the one hand, and no hiking cycle. So that's something very important. We believe that with central banks cutting rates and no recession, that's generally a positive environment for risk assets. That being said, we are not overly optimistic because financial markets have some characteristics that we believe are very worrisome. First of all, the concentration risk in the US markets, that's a big issue. Second, debt from states is quite elevated globally, and that's also an issue. Diversification is not as great as we would like it to be due to the concentration in the US market. And obviously, valuations are not that attractive in equities either. So for those reasons, we recommend to be overweighted in equities, starting from the US, but also in Japan and in other developed equities. But we also recommend to be relatively cautious and to balance that with some hedges, which could be duration. We are quite constructive on duration as well, in Europe especially, but to a lesser extent in the US. I'll come back on that later. But we think that duration after the spike in yields can be of interest in portfolio construction as well. And we also like gold for the diversification purposes and the hedges that it can play in a diversified portfolio.
Okay, so you told you are worried about too much concentration in US markets. I think you mean the Magnificent 10, so much money going to a lot of to a small hand of companies. What could you recommend for investors to not invest in these top 10 big mega caps and then go into smaller caps, mid caps, for example?
We think diversification is important, so being too concentrated is not wise, especially with such high valuations on the US market. So what we recommend is to opt more for equal weighted indices in the US, for instance. We also believe that small and mid caps are of interest, especially if we see those tax cuts and if the Fed managed to cut rates, which is our expectation, by the way. So we think that's going to be a strong support. So we would like to be more diversified and not fully concentrated on growth stocks. We believe that value stocks, quality stocks have a lot to offer in that environment, and we like diversification again.
Okay, and what's your opinion about the popularity of equal weighted indices? Because many people complain about S&P 500 being too concentrated, but many investors don't really invest in equal weighted indexes, I think, or is it getting more popular?
Yeah, I think it's getting more popular, but we like to be, active in our management and to select also the stocks that we believe are going to be stronger performers in 2025. It's true that there is one reason why those indices are so concentrated. That's because of the strong performance that's been achieved so far. So we are not saying that those stocks, do not deserve such a strong performance. What we are seeing is that some cautiousness is required now because there are some questions about the sustainability of those performance and how the AI will develop and how the rentability of those investments will happen in the future. So being a bit more cautious seems wise at this juncture.
Okay, you said American stocks are quite more expensive and Europe is but cheaper. But do you see that over all sectors, or do you see big differences between sectors?
There are differences between sectors. What we do recommend is at this juncture, and specifically because we are waiting for the implementation of Mr. Trump's policies, we believe that the US market will probably continue to outperform European markets in the coming, let's say, weeks or months.
Okay, thanks for the interview.
Thank you. Bye-bye.
Okay.